Welcome back to another deep dive into the financial world. Today we're diving headfirst into the wild world of Supermicro Computer, or SMCI as it's known on the street. This company has been a significant player in the tech industry, known for its innovative solutions and cutting-edge technology. This tech player has been making waves lately, but not for the reasons you might think. While many expected a steady climb, recent events have thrown a wrench into those expectations. We're talking about a stock that's been on a downhill slide, leaving investors scratching their heads and wondering if this is the start of a slippery slope or a golden opportunity to buy the dip. The volatility has been nothing short of dramatic. Now let's get down to brass tacks. What exactly is happening with SMCI's stock? SMCI's stock has taken a serious hit, and I'm talking about a double-digit tumble. This isn't just a minor blip. It's a significant drop that has caught the attention of the entire market. That's enough to make even the most seasoned investor break a sweat. The uncertainty is palpable, and the stakes are high. It's crucial to look beyond the surface and understand the underlying factors. The first thing we need to do is understand what triggered this freefall. Was it a sudden shift in market sentiment, a disappointing earnings report, or perhaps broader economic factors at play? Was it a single event, a perfect storm of bad news, or something else entirely? The market can be unpredictable, and sometimes it's a combination of factors that lead to such dramatic movements. That's what we're here to find out. By analyzing the data, listening to expert opinions, and considering the broader market context, we can start to piece together the puzzle. So buckle up, because we're about to navigate the twists and turns of SMCI's recent performance and try to make sense of it all. Stay tuned as we unravel the complexities and provide insights that could help you make informed decisions. In the stock market, perception is everything. It's not just about the numbers, it's about the story those numbers tell. And right now, the perception surrounding Supermicro is shrouded in uncertainty. Investors are on edge, and the atmosphere is thick with anxiety. Investors, those savvy folks who drive the market's every move, are getting cold feet. They're analyzing every bit of news, every rumor, and every whisper. They're seeing that stock price plummet and wondering if they should jump ship before it's too late. The fear of losing their investments is palpable. Loss of confidence is a powerful force, my friends. It can spread like wildfire, affecting not just individual stocks, but entire markets. It can turn a market darling into a Wall Street pariah faster than you can say, sell, sell, sell. The speed at which sentiment can change is astonishing. When investors start to doubt a company's prospects, they head for the exits, creating a domino effect that can be hard to stop. It's a chain reaction that feeds on itself. But what's fueling this crisis of confidence in Supermicro? What are the underlying issues causing this turmoil? Well, there are a few factors at play here. It's not just one thing, but a combination of elements that are creating this perfect storm. First, there have been whispers of potential regulatory scrutiny. These whispers, though unconfirmed, are enough to make investors jittery. Now, I'm not talking about anything concrete yet, just rumors and speculation. But in the market, even a whiff of trouble can be enough to spook investors. It's like a game of telephone where the message gets more distorted and alarming as it spreads. But in the market, even a whiff of trouble can be enough to spook investors. The fear of the unknown can be a powerful motivator. Then there's the issue of future uncertainty. The market hates uncertainty, and right now, there's plenty of it. Supermicro operates in a fast-paced, ever-evolving industry. The technology sector is notorious for its rapid changes and fierce competition. Technology is constantly changing, and what's hot today could be obsolete tomorrow. Investors are acutely aware of this and are questioning Supermicro's ability to innovate. Investors are starting to wonder if Supermicro can keep up with the competition and stay ahead of the curve. The company's future hinges on its ability to adapt and evolve in this cutthroat environment. Let's talk about those regulatory whispers, shall we? Now, I'm not one to spread rumors, but where there's smoke, there's usually fire. And in the case of Supermicro, the smoke signals are pointing towards potential regulatory scrutiny. We're talking about the possibility of government agencies taking a closer look at Supermicro's operations, its products, its everything. Now, I'm not saying they've done anything wrong, but the mere possibility of an investigation is enough to make investors nervous. Regulatory scrutiny can be a real pain in the neck for companies. It can lead to costly legal battles, fines, and reputational damage. And even if a company is ultimately cleared of any wrongdoing, the process itself can be a major distraction and drain on resources. Investors hate uncertainty, and regulatory scrutiny brings a whole lot of it to the table. They're left wondering what the investigation might uncover, how long it might take, and what the ultimate impact will be on the company's bottom line. Now, before we write off Supermicro as a lost cause, let's take a look at the other side of the coin. It's easy to get caught up in the negative headlines and recent setbacks, but there's more to the story. Despite the recent setbacks, there are still some compelling reasons why this company might be a worthwhile investment. It's important to consider the full picture and not just the immediate challenges. First off, Supermicro has a strong market position. They have established themselves as a key player in the industry, which is no small feat. They're a major player in the server and storage solutions market, and they've got a loyal customer base. This loyalty is built on years of reliable service and quality products. That's not something to be scoffed at, folks. A loyal customer base can provide a steady stream of revenue, even in tough times. Second, Supermicro is known for its innovation. Innovation is the lifeblood of any tech company, and Supermicro has consistently delivered. They're constantly pushing the boundaries of technology, developing new and improved products that meet the evolving needs of their customers. This forward-thinking approach keeps them relevant in a fast-paced industry. This commitment to innovation could give them a competitive edge in the long run. Companies that innovate tend to stay ahead of the curve and attract new customers. And finally, there's the potential for future growth. Growth potential is a critical factor for any investment decision. The demand for server and storage solutions is only going to increase in the coming years as businesses continue to rely more and more on data and cloud computing. This trend is not just a passing phase, it's the future of business operations. If Supermicro can capitalize on this trend, they could be looking at a bright future. The key will be their ability to adapt and innovate in response to market demands. What are your thoughts on SMCI's recent news and its stock price decline? Do you see it as a buying opportunity? Let us know in the comments below. Don't forget to subscribe for more in-depth market analysis videos.